here to help us figure out, as we head into the last hour of trading, Walser, Wealth Management President Rebecca Walser is back, and David Dietz is back with us as well. Rebecca, let me start with you. Just your initial assessment, because I found today's session intriguing. Early on, there was an attempt to sort of, I think, to sort of bring some buyers off the sideline. We started to recover slowly, but no one took the bait, and then we sort of cracked the early support point. But we're still above Monday's lows and significantly above Friday's lows. How important is it that we start to put in a series of higher lows, rather?
I think it would be a really great sign, right, Charles? I mean, it's not what I'm expecting. I'm expecting that we will potentially go lower as more cases are diagnosed and deaths rise. But, it would be great if we could start to see, the beginning of the end already. I just think that's a little bit too ambitious. I don't think we're there yet.
Do you think, and with regard to that, then, one of the issues is that the individual investment community still hasn't blinked. They still haven't had that sort of climactic, tossing in the towel. The American Association for Individual Investors came out with their update today. Bullishness went up 8 percentage points. It's really remarkable, but people are actually looking to buy in this market down, not sell. Does that bother you, Rebecca?
That was to Dan. Oh, I'm sorry. I thought it was. Yeah. Well, Charles, it doesn't bother me because I don't want the market to overreact and panic on the coronavirus, which, appears to be a really severe case of the flu causing death and more cases. So I don't want the market to overreact. I think that it is an overreaction, although we are going to have an interruption of supply chains and all of these things. But at the same time, I am shocked at this report of it going 8.3% to the bullish side. I, in the middle of this coronavirus, I was like, what? Wow. It was shocking to me. And I'm glad that we have strong investor sentiment, but the truth is we are going to have some disruption in earnings. A lot of people are staying home. We aren't getting the travel that's happening. We're having all these conferences canceled, and all of that is going to unfortunately bear out. The airlines alone over $113 billion of lost revenue. So that is going to bear out, unfortunately, in our earnings, and therefore we're going to see it. And it's great that they think it's positive, but unfortunately, it's not going to all be positive.
Well, certainly not in the short term. And $113 billion, that's all global airlines. $21 billion attributed to U.S.-based airlines, David. It's interesting because every time we do go through these things, we do look back and it feels like a blip. Certainly when you pull out a long-term chart, it looks like a blip, but day-to-day, minute-to-minute, it is frustrating, and for many, it's scary.
Yeah, there's no question about it that people are more afraid of what's going on in the coronavirus than they are what's going on in the market. But nevertheless, let's remember a few things. The market has recovered from every single dip. I've studied all these health scares over the last 30-plus years. Within a year, the market is higher.
Why do you think this one, though, is different in terms of the response? I mean, it feels like we're in the midst of one of the worst flu seasons ever.
Yeah, so I think China is a much bigger player on the world stage, so people have seen the stuff in China. We have a lot more trade with it, and so I think that is one thing.
But we've gone, I feel like, David, to that point, we've moved away from the China economic story. I thought, when this first started, I thought the buy signal would be fewer cases in China and more people recovering and going to work. That news doesn't even resonate anymore. It's happening, but it doesn't resonate anymore.
I would agree with you. So the China cases seem to be leveling off. Some of their severe quarantine situations are actually getting some traction here. So we're seeing it here on our shores. But I have to remember, this is a lot like 9/11, where people told me after the attacks, I'm never going to fly again. The airlines went down, Disney went down, everyone froze, and then they caught their senses again. I think that's what's going to happen here.
Rebecca, the bond yields, ironically, the curve has gotten a little better between the 2 and the 10. It was at 35 basis points coming into the day, but we're setting records to the downside there. Is that a special message or for you with this market?
Well, it's always when people fly to safety, obviously the yield goes down, and this is what we're seeing is, investors reacting and flights to safety, and obviously the yield's going down. But, Charles, the record lows, 0.9% on the 10-year. I mean, it's like what? We're getting so close to negative interest rates, which is what really, is somewhere I don't want to be. And so the Fed preemptively cutting everything half a basis point this week outside of the